Now, accounting standards. The present era of industrialization and globalization necessitates the study of accounting information by the various users, but the diversity in the accounting policies and in the treatment of transactions made the financial statements less meaningful and uncomparable. So in this present, or say the modern era of industrialization and globalization, it is necessary that the study of accounting information is must by the users. There is a problem. There are diversity in the accounting policies and in the treatment of transactions, which make the financial statements less meaningful and comparable. A need was felt to formulate certain minimum accounting standards. Therefore, certain minimum accounting standards was the requirement to be formulated, which should be universally acceptable, so that the financial statements should possess the qualitative features of reliability, relevance, understandability, and comparability. As a result, International Accounting Standard Committee IASC was set up in June 1973 and for preparing such type of financial statements which can be internationally acclaimed and can be internationally accounting standards which can be internationally acclaimed and internationally accepted. A committee was formed in June 1973 called as International Accounting Standard Committee IASC, comprising professional accounting bodies of over 75 countries, including the Institute of Chartered Accountants of India ICAI. And in this committee, 75 professional accounting bodies were its members, and one of them was the Institute of Chartered Accountants of India too, and the Institute of Cost and Works Accountants of India was also its member. The Institute of Chartered Accountants of India set up the Accounting Standards Board in April 1977, and in April 1977 then the Institute of Chartered Accountants of India set up the accounting standard boards for preparing the accounting standards for the accounting procedures in the country, to identify the areas of accounting where alternative and diverse practices were followed. ASB was therefore asked to draft the accounting standards in view of legal provisions of the country. So the Accounting Standard Board was given the powers to draft accounting standards, keeping in mind the legal provisions of business, trade and commerce that is prevailing in our country. ASB submitted the draft accounting standards of Institute of Chartered Accountants of India. Up to 1st April 2010, 32 accounting standards have been issued by ICAI. So till 2010, April 2010, 32 accounting standards has been issued by the Accounting Standard Board of Institute of Chartered Accountants of India. Accounting standards are written statements of uniform accounting rules and guidelines. So accounting standards are written statements of rules and guidelines issued by the by the accounting body of the country, that is the Institute of Chartered Accountants of India, to be followed while preparing and presenting the financial statements. These accounting rules and procedures are related to measurement, valuation, and disclosure of accounting information in the financial statement. So the accounting standards, they are related to the rules and procedures that are used in the measurement, valuation, and disclosure of accounting information in financial statements. As per Kohler, accounting standards are a code of conduct imposed on accountants by customs, laws, and a professional body. Now, nature and objective of accounting standards. Number 1, accounting standards are the guidelines to the accounting professionals so as to enhance the reliability of financial statements among its users. So they are the guidelines to all those accounting professionals who are trying to make the financial statements more reliable. Number 2, the basic objective of accounting standards is to bring uniformity in the accounting practices and to ensure consistency. So the main aim of accounting standard is to bring uniformity in the accounting practices and to ensure consistency and comparability in the financial statements over interperiod and from other similar firms. Number 3, these accounting standards are mandatory in nature, means they are compulsorily to be followed as per the law. Number 4, with the change in the economic environment and law of the nation, accounting standards are subject to change. If there is any change in the economic and the legal environment of the country, the accounting standards are bound to be changed, are subject to change from time to time, but in no case they will override the provisions of law. And all accounting standards, if they are changed, they will be in accordance to the changed laws. They will not forego the provisions of the law. Then the next one is, where alternative accounting practices are available, accounting standards prescribe a preferred accounting practice by giving suitable disclosure. If the management change in practice must be, if the management prefers to change the existing accounting practices, the change in practice must be disclosed along with its financial impact. For example, change in the method of charging depreciation. So, as there are different methods of preparing the accounts or different alternative accounting practices for similar accounting, similar type of accounting, for different type of accounting prefer to be brought in practice by different firms. So if the management wants to change that particular practice or that particular method, then it has to disclose the fact and has to tell that what will be the effect of that change on the accounting conditions of the business organization and how it will financially affect the profitability and the financial position of the business organization. Then only they can change it. Then utility of accounting standards. Number 1. Accounting standards provide accounting rule and guidelines for the preparation of financial statements. So they help in the preparation of financial statements by providing different rules and proper guidelines how they will be prepared. Number 2, they ensure consistency and uniformity in the financial statements and thus make them comparable over periods and from other similar firms, and they help in maintaining consistency and uniformity in the financial statements, and because of this they help in comparability of the financial statements inside the firm. In case of a comparison is made between 2 or 3 years, and in case of comparison with the other similar firms of the same industry. Number 3, the accounting standards are mandatory in nature. So auditor has to ensure the compliance of these standards. So whenever the audit is being done, it is the duty of the auditor to see that the accounting standards have been followed, mandatory or not, as per law or not. This enhances the reliability of financial statements among the various users of accounting services, and this is done to make the accounting information more reliable. Fourth, the mandatory nature of accounting standards ensure complete disclosure of accounting policies and practices. The accounting standards should disclose all the accounting policies and practices. Thus, reliability of financial statements is further enhanced. Accounting standards issued by the Institute of Chartered Accountants of India. The Council of Institute of Chartered Accountants of India has issued 32 accounting standards so far, but as per Companies Accounting Standards Rule 2006 notified as on 31st August 2011 in pursuant to section 211 subsection 3C of Companies Act 1956, Accounting Standard 1 to 7 and 9 to 29 are operational. The compliance of operating accounting standards is mandatory. These standards are as follows, and you have to learn these standards. The list is given here and you have to learn them as per the number of the standard. They may come in the objective type questions.